The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, good morning, everyone. Have a happy week. Whatever week this happens to be, it's going to be the 19th of June. Today would have been my father's 100th birthday. I lost him a long, long time ago, but he would have been 100 today. Anyway, let's take a quick look at the DAX index. As you can see here, this has still been in a pretty tight trading range up around this 12,800 level. There's been some nice swings through here, of course, but it's really just been in a trading range. It could break out in either direction, of course, but that's really what's been happening to it recently. What I'd like to do now is switch gears a little bit because I hear a lot of people talk about technical analysis, and what I'd like to do now is to just post a chart here of, this is December wheat. This is up to date. It closed at 505. And if you look at this December wheat chart, say you're a neophyte, you've never seen anything, and you look at this chart and you say, boy, I can't see anything here that makes any sense at all. I mean, it really looks like, up and down with nothing going on at all. But if we were to take it in context of pattern recognition from the stuff we learned from folks like H.M. Gartley and John Hill and a whole bunch of other guys along the road, take a look at December wheat. When you put the chart up and put the patterns into it, you'll see that it has formed a perfect head and shoulders pattern. You have the left shoulder and the right shoulder nearly equal. They're all at Fibonacci numbers. You can see here December wheat closed at 503 1/4. It opened down 9 cents in the overnight market, but it's since come back and went to this 505 level again. But you'll notice that there are 4 ratios coming together at that time. You have a 127, 1.618, a 79, and then you have another 1.618 retracement off of the ABCD leg. So you have 4 numbers coming in here at this 505 level. Now, what's going to be interesting is if the wheat gaps up and stays there, this is going to be a breakdown of a head and shoulders pattern. This market means that it's probably in a really advanced bull market, or a beginning bull market, and could go a great deal higher. But as you look at some of these patterns, and I didn't draw all the little ones in, I just did the larger ones just to show you how you can use technical analysis to your advantage to determine whether you want to be either long or short, and how much you have to risk when you're going to when you want to put a trade on. This is in lieu of any fundamentals. I am a technician. I do not look at the fundamentals at all. I rely on people like in the grain markets, of course, Rich Anderson. But even when I hear that, I put it in the background because the sum total of all the buyers and sellers is going to be in that chart. So if prices are going up, there's more buying. If prices are going down, there's more selling, and that's the main thing, that you really want to know. I want to just give you a perfect example of this. If you go back about 25 years ago, we had the Nikkei was trading at around just about 30, almost 40,000. It didn't quite hit 40,000, hit 39,000 and change. That was on December the 30th of 1989. And since that time, it had been in a bear market, and it went all the way down to dropped 82% of its value, getting into the 2009 low, which all the rest of the markets were bottoming around that time. So you'll see that. The reason why I bring this chart up is if you'll look at that structure at the high there in the Japanese stock market, that looks very similar to the charts of Amazon, Google, Facebook, and a whole bunch of others. So even though these patterns don't repeat perfectly, they do repeat a lot more than you might think. So keep in mind that nothing goes straight up, at least it hasn't yet, but there's always one, and maybe it's going to be Amazon. Who knows? I see that Mr. Bezos is meeting in the White House today, and I'm anxious to hear what that dialogue sounds like. All right, we've got an ABCD structure, folks, that you might like this morning. We're going to bring up here and show it to you. This is the E-mini S&P. Let's get it up here. We've got one in the Dow Jones also, but we've got a really nice ABCD structure here in the E-mini going over the last, on a 15-minute chart, going over the last 3 days. Pulled right back to a 78% retracement on Friday, and then we went up and made an ABCD last night around this 2440 level. Now, if we get above the 2442, that would be all bets are off, and we're most probably going to go to much, much higher prices. But we should be in an area of some pretty strong resistance. If we take a look at the Dow Jones E-mini, you're going to see the same type of pattern occurring right now also. Now, this is a 30-minute chart, and again, you can see the pullback on Friday was exactly at a 78% retracement. Actually, it was at 707. It was not 78. It was 707. But the difference between the 707 and the 618 is, it's like $100 in the Dow E-mini. So that's, basically insignificant. But the key point here is you'll notice as it's made the high here at the 1.618 levels, that's why this level is going to be so important at 21,435 in the Dow Jones E-mini. So that's another one that's lining up today. So keep a close eye on that. Both of those are going to be really interesting to watch. And now we've had a question about Bitcoin. I'm just going to bring up the chart on Bitcoin. That people send it to me, and I enjoy looking at it. But believe me, I have no interest in Bitcoin. I've got too much on my plate as it is. But let me pull it up here to let you show what Bitcoin looks like, because there are a lot of people evidently trading this. And the reason why I say that, you can see a lot of the ABCD patterns that are in here. And if you'll notice the bottom, on June 15th, a little before noon, you can see that it made a really nice 3-drive to a bottom pattern. That was from about 2 o'clock in the afternoon on the 14th down to around 11 o'clock in the morning on the 15th. You can see that ABCD pattern. It's where the green dot and the red dot meet at the very bottom there. That's the D point. And then it's had a started ABCD structure on the way back. It follows Fibonacci numbers extremely well. I don't know how to trade it. I don't know where to trade it. I don't know how they consider margins. I mean, it's non-exchange as near as I can tell. So I'm staying away from it. And but remember, I didn't believe that colored TVs and microwave ovens were here until 2006. So keep in mind that I'm a little behind the curve on some of these things. So watch it very, very closely. I've had one other question from someone and that's about the Bradley model. And I put this into the newsletter this week because we'll put the Bradley in here so you folks can take a quick look at it. And, it's far from perfect. That does a pretty good job. And you can see here that we are in an area where the Bradley, should be topping, and we should be looking for at least a move down into the July 10th area if this is in fact going to happen. And we've completed just about all of the patterns we have completed all the patterns in the NASDAQ for sure, and we've completed most of them in the New York Stock Exchange Index. Only the IWM is lagging a little bit. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming, see high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and this seems to be a day where we have a lot of ABCD patterns happening. Now we have one in the gold market. As you can see here, this is a 4-hour chart, and I like 4-hour charts because it allows you to see several months at a time, and it's a little bit more distinct than a daily chart, and it also allows you to reduce your risk a little bit. But the key part about this ABCD structure that we're looking at is, if you remember down on May the 9th when we made the bottom down there at 12.14, and then we rallied, about $80 an ounce. It made a perfect ABCD on the way up during the time of mid-May. It pulled back right to a 38% retracement. That was the C point. And from there, we went right up to the top. We took out the high of April by just a little bit, and of course we were warning you about that because we were not seeing any strength in silver at all, no strength in platinum, and the XAU was just absolutely, playing in the mud. So this is not very good. But where we stand right now is very, very important here in the gold market. This is basically what I think it's last chance. If you'll notice the gray ABCD pattern that I put in, this is a Gartley pattern. You have the perfect retracement there at the 61% retracement at the 1284. That was right at the time when the Fed was in there with their I guess it was the minutes or whatever it was. And now this stretches down here to the 1247 level today. That's where you'll have a 1.618 expansion. You'll have a 61% retracement from the low on May the 9th. So at that point, and you're not only that, but you're back into that area where the 382 level held. That was very strong support at that 1248. So there's a lot of things that'll tell you that you're getting down to this area. Now, if it goes below it by just a little bit and then snaps back, that's okay. But to see it at 1242 or something like that, that tells you that this pattern is failing, and you want to be, very, very skeptical of it. But the ABCD structure is important here because the AB leg is equal to the CD leg in both price and time. So it's going to be very interesting to watch the gold here at this roughly 1248 level. It should be very interesting, to keep an eye on that at that point, because it's a very, very powerful level from a technical standpoint, as you can see. Remember, this is all related on technicals, has nothing to do with the fundamentals. I'm not a fundamental person. I gave that stuff up way back in the early 70s, and I'm glad I did. Didn't miss it at all. But, it's just probabilities. You have to learn to think in probabilities, and when you do that, then you have something that you can control because you know what the risk-reward equation is, and you can control the risk. You can't control the reward, but you can certainly control the risk, and that's what we're trying to do as we walk through these charts and seeing it. By the way, I hope you get a chance to listen to the show on Wednesday when I do the webinar. It's basically an autobiography. I've got a whole bunch of notes, and so many of my friends have said, don't forget to say this, don't forget to say that, and there was a lot of stuff that went on during those years, so we'll have a lot of fun, and I think you'll enjoy it, and you'll hear the good, bad, and the ugly, how I bounced back, and the times when I was really young and was a little too much of consumed by myself, but that's neither here nor there. You have to go through those times, but it was definitely interesting to go through it. Now, I did want to. The Amazon is in the news. Everybody is, talking about the stock. I mean, it's everywhere. Whole Foods. We have 2 stores here in Tucson, and even in the stores, they're talking about it. So, he has an idea, and it's been working for him. And you have to go with the success because he certainly had a model that nobody else thought of, and that's the whole key, to being successful is to see something before everybody else sees it. And that's it. That's what speculation means. Speculare means to observe. Comes from the Latin word. And if you observe more than other people do, then you can profit, from that level. I had a question about the platinum, and I wanted to show you the platinum chart here, just to be, since we're talking about gold too here. We'll take a look at it right here. You'll see that platinum still looks like it wants to go lower. It's held this level relatively well, but it just looks like it wants to go lower down to the 78% retracement. Yeah, I know they deliver to your doors. Wait till they have the drones, and then they're going to come right down to your chimney, just like Santa Claus. So that'll be interesting. I frankly don't understand how Amazon does it. I use Amazon all the time because I'm not much of a shopper, but I can go in there and I can buy something for my grandkids, have it sent directly to them in Philadelphia with a little gift card and everything, with free shipping most of the time. I mean, it just absolutely blows me away. And the things that I buy and I don't like, they give you a return thing. You walk it across the street to the UPS store and send it back. So that's it. That's really what happens. Anyway, we'll see what's going on. The webinar on Wednesday is going to be about 2 hours, around 2 hours, maybe a little over. I'll have some question and answers, of course, that I'd be glad to answer for anybody. But it'll be around 2 hours is what I'm guessing. I did this. I did this for the Saxo Bank over in Copenhagen, and it went over very, very well. And the folks really enjoyed it, and we had a lot of fun too. So it'll be interesting. We're going to be doing it again this fall, it looks like. Okay, let's move on to some of these other things. We had Stan Harley on Friday, and he talked about this key date that we're looking at. We're right over it right now. And this should be very interesting in the stock market because we have the Bradley model turning. We have that things from Bill Meridian where he showed where the cycles for years ending in 7, move to the downside quite a bit. And it's really amazing. I had another gentleman, John Jameson from Wales, send me another summary of what Bill Meridian did, only a little bit longer term, going back many, many years, and it basically verified what Bill Meridian was saying, is that years that end in 7 have a really strong bias to the downside from summertime all the way through the fall. So whether it's going to be that way or not, I don't know, but we do have some evidence that says we're getting close to these levels to see if it's going to be that level. The crude oil, folks, it looks like it's had a dead cat bounce of about 50 cents this morning. It doesn't look very good from a technical standpoint. It really appears to be the fact that we had this 3 drive to a bottom pattern, and the only good part about this chart is the 3 drive to a bottom pattern has still held. Now, we haven't been higher than $45 after we made that 3 drive to a bottom pattern on the 15th. This is not a bullish sign, boys and girls. So, it does not look good for crude oil. Gasoline looks a little bit better, but the crude oil does not look that good at all. It has ABCD written all over it to get down to the $42 a barrel level. I mean, that's, there's all kinds of, there's a big 3 drive to a bottom pattern. I mean, everything is there saying that it's, bada bing, bada boom, it's on its way. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I've had several people ask me over the weekend, in fact, well, not several, actually 2, about the opening price. The opening price is important. John Hill and I wrote a book called The Opening Price Principle. It was basically a rewrite of a book by Earl Haddady. Sibit Haddady was a marketing information, for commodities from Pasadena, California, back in it was Jim Sibbett and Earl Haddady, and they did a lot of work on the opening price, and they didn't have computers, of course, and so when the computers came to fruition, John Hill's son was at Duke University, and this was 1982. And we had a lot of data, and so what we did is we tried to look at the data to see how important the opening price was, and of course we found that it was very important. But remember, since we have electronic trading now, that has changed a lot because we basically have trading 24 hours a day, but the opening price is still important. And this is really true when you're trading stock indices, because it's that first hour of trading between 9:30 and 10:30 that they call amateur hour. And the reason why they call it that is many of these firms put their orders in right on the open. And the people that take the other sides of these trades, they know that, and so they raise the bids, lower the offers, and that's why you get these aberrations. But after the first hours, things settle down. The same is true when you're trading foreign exchange, because you can go into the market and you can see what's happening in London, and that's between 8 and 9 o'clock in the morning London time, of course, which is, let me see, that's between 1 and 2 o'clock in the morning New York time. So that's why that opening price is important. So when you're trading stock indices, the judgment usually is look at what's happening, at that 10:30 time frame, because that's the one that you want to really keep an eye on as far as placing your trades for the day. But the early morning part of the trade is known for amateur hour because of that. So we'll see whether this is going to make any difference. But watch it. It's a good thing to use. One of the things you can use that's very important, and that is if you have a position that you have on and you're not sure whether you should be in or out of it. You don't really know. You're really in a quagmire of whether you should be in or out of it. Just look at the opening price of the day, and if you're above the opening, the chances are you should stay with the trade. But if you're below the opening and you're long, you should be out of the trade. So that's a rough idea to to really understand how some of these things work. That's just my 2 cents worth, but believe me, I paid the price, and it's well worth the 2 cents, I can tell you that. Another really good rule that I have on this big painting behind me here in my office, this big oil painting, it was done many years for me, is the 3-day rule. And that is, if you don't have a profit in the position that you're in at the beginning of the third day, you're in the wrong side of the market. So make sure you use a really close stop or just exit, because usually if the pattern's working, it's going to work within a day or two. And at the end of the second day, you don't have a profit, you really ought to reconsider, whether you're right or wrong. Now, let's say you're only out $100 or $75, basically that's a scratch or a break even, but you're within, say, half of your stop. Say you're risking $400 and you're out $200 at the end of the second day. You got to really tighten the ship, because it's a situation where you don't want to sit with those losers, because the losers are the ones that they eat away at they eat away at the capital, but they eat away at the trader's soul, and that's even more important. So watch those as you do your trading. But that 10:30 time frame, that first hour in the S&P, Nasdaq, and E-mini Dow Jones are all very important, and just kind of watch it. Prove it to yourself. Like Jim Twentyman says, defy human nature, do the work yourself, and it will be a big advantage to you, I believe. Let's take a quick look here at the price of Amazon. I wanted to bring the chart up to show you how quickly it came back from its losses. We'll just see it dropped $50. It dropped 100. Yeah, it dropped $80 a share. And since that time, it has rallied back. I don't know where Amazon is trading today. It's probably about $9.90 right now, I guess. Could someone post what Amazon is trading? Because I really don't have access to it right now. I'm not really. $9.97. See, it's already back to 1,000, so it's probably going to test that $1,000 mark again. And see, it opened on its high. There's another one. You got to be really careful there. It opened at 1070. I don't know if that's a new high on Amazon or not. Was it? 1017. I'm not sure whether it was. I have to wait and see. if that's going to be, if that's going to be the case. Hold on here a second. I have to double check something. Hold on one second. I got to do. Hold on. I've got to answer something here, folks, or I'm going to be in big trouble. Okay, let's take a quick look here at the what's happening to this wheat. Just see what we go. Okay, so it gapped up to a new all-time high. Is that correct? At 1017, and now it would drop $10. I mean, that was there was nobody buying that breakout. So I don't know. It's just wild up here, folks. I mean, that's I haven't been in Amazon for a very, very long time. Anyway, let's just look at some of these others that people have, sort of asked me about. Another one that's really interesting from the foreign exchange perspective is this Canadian dollar. Keep a very close eye on this one. It's up just a little bit today, but we still have several patterns coming due here very, very closely within about 100 pips from where we are right now. And this is in an uptrend, folks. If you'll notice this pattern here in the Canadian dollar, you'll see that the 786 line from last August to January to where we are now, that's almost a perfect trend line. They're both 78% retracements. That makes it a 135 pattern. This is going to be real interesting here, and you have an ABCD structure coming in here at this Canadian dollar at 131.50 also, and we're trading about a little less than 100 pips above that right now, so that could make that very, very closely this week. So watch it. This is another one on the watch list that you should pay attention to because it has so much harmony in it that it just is really a good one to watch. The difficulty with this one is if you look at the long-term weekly on this Canadian dollar, it could easily go to 115 with a great deal of thrust. So we'll see if that's going to be the case with some of these things that we're watching here this morning. Okay, now let's go on with one other thing that somebody. Oh, here we had another question about the VIX index, and let's put this up here. This is the long-term weekly chart of the VIX index. Let's just bring this up to show you where we are. I think that this is like an insurance policy, a life insurance policy. You're down in a new low ground. You've got this long-term cycle. It's a year and a half long, and it's already bottomed. It's tested the bottom. It rallied a little bit, backed off a little bit, but I think there's enough out there that could go wrong that it's something that you ought to do is just as an insurance policy is to own some VIX. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays. Catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back, folks, and the Amazon made a higher high by $0.50, and it's already backed off $15. So that's almost like key reversal time this early in the morning. But like we say, it's early in the morning, and that has been the leader of the pack for sure. Just keep in mind that first hour of trading, folks, that just really means a lot. That really does. There's so much statistics behind it that you really should respect it. And that's my 2 cents worth. So we'll see what's going on. Another question that we've had is about the Treasury bonds and Treasury notes. Here's that's just basically. I got to answer another question here. There we go. Okay. I am putting in orders, so basically that's what I'm doing. All right, we have to watch the Treasury notes and Treasury bonds because they have a really high propensity to turn down from here, folks. They have a lot of things saying that you're looking at a market that has just made a 382 retracement. That's usually a very bearish sign. And the notes, of course, are the much biggest much weaker than the others. It's taken almost 2 months, a little over 2.5 months to make a 382 retracement. That in itself is rather bearish. So watch that closely because any close below that 124 level in the Treasury notes and below the 153 level in the Treasury bonds would signal that this market is ready to make a move to the downside. And as we showed you last week, you're looking at the level. Yeah, you're right. The getting back to the S&P, 2442 completes the ABCD pattern that we were looking at earlier this morning. Whether that's going to happen or not, whether it's going to stop there or not, we'll wait and see. But that was the ABCD number in the E-mini S&P. But the Treasury bonds and Treasury notes do have a very bearish pattern because it's taken so long for them to reach those levels of 382, and that's not a very good sign. They've been going up a little bit, but we've only been able to go up 9 handles in a little over, just a little shy of 3 months, and that's not a good sign. If you'll notice, the other times that we've had these bottoms, we've moved anywhere from 12 to 15 points, off of the thing, and we topped in this market, back in July of 2016 when we had that big butterfly pattern up in there. So that's another thing to see that. So keep in mind, we live in interesting times, as they say in the trade, but that's neither here nor there. Now, the wheat did open a little bit higher. It opened a penny higher than Friday, and it's now still sitting at that same level. Beans are still up on the day. They backed off a little bit. So watch the wheat today, because if the wheat turns down and gets below $5 a bushel in the December wheat, that would complete that head and shoulders pattern that we were watching here this morning at the very beginning. This is about as beautiful pattern as you could ever see for technical analysis. It just doesn't get any better than this. You have time, price, symmetry, three ratios coming together, several patterns coming together. It just doesn't get any better than this from a technical standpoint. Fundamentally, I have no idea what's going on, but technically, that's what this looks like. It's very, very interesting to see this thing form, because it's quite exciting to watch it do its thing. So watch it very, very closely, folks. And any move, if you get below the $5 a barrel, $5 a bushel level in the wheat, then you could sell it and then put your stop above the high. So you'd be risking about $350, which is pretty cheap to become a farmer. And that's the way you'd probably want to take a look at it. As far as the U.S. dollar index, to me, it's holding up really nicely. We haven't had much of an excitement yet. We've had a little bit of a move up and down in the euro today, but it's basically down just a little bit from where it was. But the U.S. dollar index has done everything that I can see that would tell us that we're ready for a pretty substantial rally in this. And if we take a look at this, you'll see that we've held that 96.50 level 3 times now, and we're trading at around the 96.80 and change level right now. So it looks like it's still holding, and any move above the 97.90 level would say that we're getting ready to go higher, i.e. the euro go lower. Now, I know they're into all kinds of negotiations in Brexit, and how that's going to affect everything else, I don't know. And neither does anybody else. So just keep an eye on the charts and watch the areas, because if we can break out of the British pound above the 131 level, this would be a really big, interesting spot, to take a look at this thing. Now, one other thing that we should look at this morning, and that is the NASDAQ, because it has been lagging, badly these last few days. And if we take a look, because it hadn't made the 61% retracement last night, and let's just double check to see where we are now, because maybe we've done that. And no, we're still not. We just made a really nice ABCD pattern. Oh my goodness, what a beautiful ABCD pattern here. Let me send this out to you folks, and you'll see this is a really nice one here. Pay attention to this one, because you're right at a 78% retrace. Wow, there's so many things coming together, you can't keep track of all of them. Wow. Let's just get here. There we go. I think this is it. There's the NASDAQ. We'll bring it up here and you'll take a look at it. I didn't put the numbers in because I didn't have enough time, but you'll see here the ABCD structure comes in right about here, about this 57.51, and that's even at the 78% retracement of the high we made on the 14th. So that's the main thing. That big drop that we had, folks, from the 9th to the 12th, that means something. I have to say that really does mean something. Now, we did rally back 50%. We came down, made a newer bottom back on the 15th by just a very, very small amount, a point or two, and then we rallied back up. But now we're completing, the ABCD pattern. So whether that's going to be in effect today, I'm not sure. But watch it. There's just so many of them coming together here at the same time that it probably does mean something. And, maybe it means they're all going to fail, but they're all coming together. That's all we know. Just like they say in the Baptist church, come together. I used to go to the Baptist church down in Memphis when my friend Jay was still alive. We used to go on Sundays to listen to the music, and it was really a spectacular thing to see, what the South was really like back in the old days. So we'll watch that closely too. Anyway, we have another minute to go before the break. No other questions today. The crude oil, to me, is still wants to go lower, folks. It's trading at 44.89. It just has too much stuff on the charts that says it wants to go to 42. There's no bounce. There's no reason to look at it. We're still $2 away on the gold. It's trading at around 12.50. The number we're looking at is 12.48. Watch that one, relatively closely. And that's the key thing to keep in mind, I think. And the bonds are, basically unchanged on the day. So right now it's just a little bit of a rally in the stock market, which that goes up all the time. But like Isaac Newton said, what goes up must come down. Remember, there's a lot of things suggesting that we are at something really, really critically high. So watch it closely, or you'll pay the price. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I'm going to leave you with a few cogent words from my good friend Mark Douglas, and that is never let the market save you, because you must save yourself. I can promise you that. Nobody there is going to be having your back, so you have to do it yourself. Take responsibility for it. It's a fun business, but you have to be able to take responsibility for it. You have to have a belief and absolute trust in what you're doing, and I'm going to be covering some of that in the webinar on Wednesday, and that's the thing that probably kept me alive more than anything else in this business, besides the fact that having a whole bunch of family and friends, loving and supporting me the whole way. But those are things that you have to learn the hard way, the school of hard knocks, because trading is simple, but it's not easy. And that's a paradox that you have in trading. The trader has to be rigid in what he does and flexible at the same time, and that's really hard to do, but it can be done. But it does take practice, and you do a little bit each day. You have to take baby steps, and when you do that, you'll be far better off. Remember, we got another half hour to go before amateur hour is over in the S&P, and if we're trading below that 2440 level, by that level, I think that would tell us that we probably made some type of a high today, and you wouldn't have to risk very much at that point. But we need to be below 2440 in that S&P at the end of the happy hour. What do you call it? Amateur hour. I guess happy hour would be a good way to look at it too. Anyway, remember, we're going to have Paula Douglas as our guest on Thursday. She's going to go over a lot of what Mark worked on and what he did and what he was doing, and she's carrying on the torch. And so that'll be really fun to listen to her, what she has to say, and it will be great. Someone's asked a question. The next U.S. day, the trade, next trade I see in the Canadian dollar, Mr. Z, it's on Friday at 10:22 in the morning, New York time. So write that down. And if you believe that, I still have 2 shares of the Brooklyn Bridge. I don't know, Mr. Z. All I know is the price of 13150. Watch that one.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.